Welcome to the Money School podcast for Tuesday, September 1st, 2020. Happy Tuesday, everybody. I hope you're having a good start to your week. Off the top, just quick update. There was no Patreon episode this weekend. I'm in the final stages of rolling a bunch of accounts into a few consolidated accounts, one of which is going to be a live stream where I trade everything on the Patreon, a fully managed account. Everything will be transparent, all the profit and loss, all the trade management, everything I put on, all of the portfolio holdings, all of that stuff. I get a lot of basic questions from like order types to, just executing and putting trades on, building positions, how I manage things. And I think it'd be best to just do a real account with real money. It's going to be $40,000 in this sample account. And that's going to be just a project for the Money School, and it will be, just one of my retirement accounts, and it will be something that we'll live trade together. So you'll see exactly what I'm doing, what I own, and then I'll do breakdowns on all of those, and that's going to supplement kind of what we've already been doing. So just going to upgrade that. That's in the last stages. Appreciate the patience on that. Didn't have top 5 position. The only thing, I have a really large square position at the moment that I'm winding down in the final stages, and then I'll be in all cash and get everything rolled. So I'm going to roll it all in full cash, and then it will be fresh to start, and we're going to build everything back up from the beginning. So appreciate the patience on that, and for all the support for the Money School. Had a lot of great conversations. I love getting screenshots from people of their, portfolios or trades they're making, where they're making money. And, and it's a lot of people that I know have never invested before. And that makes me really happy that people are, feeling confident to get in there and, put a little bit of their own money in and, start to dabble in adopting the mindset that they're going to save money and make it work for them. And, I think it's great. So if you're out there and you're getting started or you're, making trades and investing, you're on the right track, and it's been great so far. So getting into some news, interesting headline that came out overnight. McDonald's, currently trading $159 billion company, trades at 34 times earnings. They have about $1 billion lawsuit from a little over 50 African-American franchisees that are claiming discrimination. McDonald's is a real estate company first and foremost, and there has been a lot of really shady practices in terms of where they have allowed black franchisee, owners to open up stores and to, operate their businesses to the detriment of, hundreds of millions of dollars of lost profits. So, going through it, I haven't read a lot of the case. It seems like McDonald's has definitely done some shady stuff at the very least. I imagine they're going to settle this lawsuit. There's a number there where everybody will be happy to, get some money to be made whole, and they should be made whole. Discrimination is unacceptable. And if that's the case and that's what's been happening, then there should be, some restitution made there. So, McDonald's has another lawsuit with their ex-CEO. He was doing some shady stuff. At the end of the day, I think people are going to keep going there for burgers. I think the average person that goes to McDonald's probably doesn't know about either of those lawsuits. I don't think they care. They're selling whatever they're selling. They're selling a lot of it. Their technology has been great. They've invested a lot in that. Not super bullish on McDonald's in general. If I had to buy anything in fast food, it'd be that and Chipotle. Chipotle has good technology and can deliver. I think they're more millennial based, but McDonald's has, been a great stock for the last bunch of years. So that was just a headline I wanted to touch on really quick. The other story of the day is Zoom with their earnings. They just blew their earnings out. Their revenue beat, their earnings beat. They're now a $129 billion company. They're almost the size of McDonald's. They're not trading at 34 times earnings, though. They're trading at 1,800 times earnings. So it means you're paying $1,800 for every dollar of earnings. You're paying for a lot of growth with Zoom. I thought Zoom was done about a month ago. That was probably one of the worst calls I've ever made. They're just crushing it. And I think, as these schools adopt Zoom for a lot of their learning, it makes sense. So that stock is rampaging higher, as well as DocuSign, which had huge earnings as well. That was, up double-digit percents after hour. Interesting to see these, the cloud just continuing to dominate and take major share over the way that just the world interfaces with business and the way stuff's getting done. It's all digital, it's all online, it's all in the cloud. So, it's our bread and butter. We like cloud, we like data center, and we like a lot of the GPU stuff, which I'll get to NVIDIA in a second. As I mentioned, I have a big position in Square, which I'm winding down. I just love this company. I think what they're poised to do, whether coronavirus is good or bad, if the development's going forward, if things are negative and there's another stimulus, they're going to be the ones that distribute the PPP. If things get better, they're going to be right there with their terminals, and they've already moved a lot of their business online and with Cash App and Square Capital. I mean, it's just an amazing company. They're only trading, it's a $74 billion company, and they're trading at 355 times earnings. So, it's an expensive company from a PE standpoint, but they're growing at a huge rate, and they're only $74 billion. I still think that Square eventually is a company that a big bank or financial money center, somebody's going to eventually buy Square. I think that it has huge takeout value, and I think that it's going to be at quite a bit of a premium to $74 billion. So a lot of reasons to own Square. It's one of the ones that I find the hardest for me to let go personally, but it will be up at the very top once we start rebuilding next week. Last bit, NVIDIA had their GeForce announcement. Again, as always, Jensen from his kitchen just pulling graphics cards out of his toaster and out of his oven. And, what they're doing is just incredible. What they're doing compared to AMD, there's just a huge difference in their software moat. The ray tracing software that is overlaid on top of the hardware that they have is just a huge advantage in their gaming, and all of their products that they're rolling out and the price points I think are great. For the next generation of cards that are coming out, I think they're just going to have a great run in the gaming side for the next couple of years. So what they announced, again, never fails to disappoint. They're just such a monster company. Constantly inspired watching the work that they do, how they're always pushing the limits and, getting stuff done. It's awesome. So those are a couple stocks that I wanted to touch on really quick. And another thing I'm going to start doing is introducing, for investors that don't want to take individual stock risk and they want to, maybe specialize in either some index funds, some, ETFs. I'm going to introduce some sector ETFs or some specialized ETFs, some products that I think could be good additions to your portfolio, starting with the Wisdom Tree Cloud Computing Fund. Trades ticker WCLD. Has a net expense ratio of 0.45, which is pretty average for a specialized ETF. You can get a lower expense ratio with an index fund like QQQ or XLK, but those are really concentrated in Apple and Microsoft and the big boys. This is a more mid-cap growth tech type of portfolio. Has $650 million of assets, and the top holdings are Fastly, Zoom, DocuSign, Zscaler, Twilio, Wix, Cloudflare. A lot of the, just if you look at any of the returns on those, they're all triple digits in the last year to date. Companies that are just have massive growth. And this fund holds, if you're not familiar with ETFs, it holds stocks in, a portfolio that allows you to take specific sector risk versus individual stock risk. And while all of these names in here are going to be correlated to a certain extent with the NASDAQ, they are specialized in cloud computing, so they're going to continue to dominate as the world just becomes more digital. And then as business shifts into the cloud, which is just storing your information and computing power somewhere else and doing it in a data center somewhere else, which is, powered by NVIDIA largely. A lot of these companies work and are built on NVIDIA hardware in their data centers, and they're just, basically powering the internet and powering how business gets done now in a digital space. So I like to look at ETFs to see what their top holdings are, see what they own. This is one that if you need some growth, or if you want to add some cloud computing and you want a different name from some of the Salesforce or Adobe type of cloud players, I tend to have a lot of mega cap type growth. If you're looking for something a little bit smaller, you can own the ETF itself, WCLD, or you can open up, slide over to the top 10 holdings, and you can look at what it holds and look at it as an X-ray. I think that's a great practice to discover new stocks and see what's performing, and to introduce things. It's what I want to do each week with introducing a new ETF in a different sector, to put things on your radar and just to hopefully introduce possible investment ideas that make sense for you. This one is one that jumped out right away, and is one that I've kept an eye on. And I don't particularly, I own individual stocks directly. I don't hold a lot of ETFs, but for a lot of people, it's a simpler way to put their money on the table and to get invested in a way where they're not taking just really specific risk, but they're in a way where they know what they own. It's still much better than a mutual fund or a lot of these growth cap funds, or a lot of when you're looking through a 401k and it has a lot of limited options of what you can own. That's different than an ETF. ETF trades like a stock. It's on the major exchanges, and they're a lot more liquid. And you can find an ETF for anything at this point. So that'll be something we'll roll into the Money School. It's an investment vehicle that you can own in your IRA or solo 401k, all those kinds of accounts. So that's it for today. I'll check in back in the next couple of days as the money starts to get rolled out and we get the accounts built. There's going to be some more posts on the Patreon as we start to rebuild and put those positions on. So look for that. Again, thanks for supporting the Money School. You can become a Money School member at patreon.com/Nate Brantley. Thanks for your support. Have a great night, and I will talk to you soon.